move on and now talk about Vaibhav Global, where the Group CFO is joining us. Now, if you see the Vaibhav Global share price, it was what, about 4.5 rupees in 2010. It's turned out to be a multi-bagger many times over if you look at the current share price. Yes, the share price in the last 6 months has been under pressure and seeing sell-off. Let's talk about what's happening at the company as well as the kind of demand outlook that we are seeing. Joining us is Vineet, the Group CFO. Good morning. Thank you so much for joining us. Vaibhav Global in the past, of course, has been talked about as a multi-bagger, not seeing the kind of response that you folks had gotten used to in the last 6 months. So let's talk about the business. How is the overall demand setting up? When you go into 2022, what is it looking like as far as the demand goes?
So good morning to you and your viewers, and season greetings to everyone. So in terms of business outlook and demand, we continue to see a robust demand, but one has to see in perspective that last year in pandemic scenario, home shopping and internet shopping was at its peak. So right now we are lapping that growth over a very high growth of last year. So we are growing. Q2, we grew at a rate of about 6%, slower than what we and the market expected us to be. But like I said, it has to be seen in perspective of a very, very high growth of last year. And what we are seeing right now is a phenomena of revenge physical shopping, what we call it. People are just flocking into retail physical stores after being locked in their homes for good 1.5 years due to pandemic. So we are seeing that phenomena lapping a very, very high growth of last year. But the good part is that we are in the digital space, we are in the home shopping space. So we see a bit coming back of that demand month by month, slightly slower than what we had expected it to be. But we are extremely excited. We understand that this is a transient kind of a phenomena, and home shopping, digital shopping is the future. The consumer behavior is going to stay for long, and we are investing in all the right things. So we are extremely excited about what the medium term holds for us. And what we have guided the market also is a 15 to 17% growth for the medium term. So come FY22, we are pretty confident of our growth and the growth pillars per se.
Morning, Nikunj also joining in. Now, I'm going to pick it up from where we left last time, which is that there was a drip in your Q2 numbers. But this is the peak season. How is this year's festival demand, especially the Christmas demand, different from last year? Because there's additional market, Germany, which has got added.
So the season have been great for us. Like I mentioned, we are lapping the great growth of last year. To that extent, the growth rates may not be what one is used to see in Vaibhav Global. Revenge physical shopping is gradually coming down, and home and internet shopping is coming back. We expect in a month or maybe a quarter more, we will come back to that normal kind of a levels. This time the Christmas shopping was different in the sense that it started a little early. People had worry of material being available because of all these supply chain disruptions. We being vertically integrated, having vertically integration of supply chain, we did not face any such issues. We were actually overstocked, and so to that extent, availability was not an issue like many other retailers. But because of this concern in mind, started a little bit earlier. What we also understand is that it may continue well beyond the Christmas season. So the gifting season this time is expected to continue way beyond even in Q4, and we are prepared for that in case it happens. So we are growing above last year. Like in Q2, we grew, though the rate of growth was slightly lower than what we expected it to be. But the best part is like we are the most heartening and the satisfying part is that we are gaining market share. So we are growing much faster than the other companies in the same category.
There's a big tailwind which you are suddenly enjoying, and that's rupee. How has that translated into better margins for you? And if you could also translate the impact of this entire supply chain disruption, because ultimately you are a platform company which is sourcing from various geographies. And we know what is happening in terms of container shortage, supply shortage, movement of goods.
Yes, Nikon. So I'll take the second part first. So we have a vertically integrated supply chain. So we have our own sourcing countries in India, China, Thailand, and Indonesia. We manage the supplies and the manufacturing ourselves. To that extent, we are able to withstand such disruptions much better than any other retailer in those kind of geographies would be doing. So no disruption in terms of supply of materials. We manage that much better. But yes, we are also seeing inflationary pressure in the sea freight. So this year the sea freights are much higher than last year. We have started seeing some tapering down of that in the last 1 or 2 months, and we expect that to continue in the same way and come to a stable kind of a nature back by Q1 of next year. So no supply impact in terms of any disruption, but yes, inflated sea freight cost is what we are also facing like other retailers. Coming back to the rupee point, so Nikunj, till quarter two, the year-on-year average rupee of this year and last year was very similar. So what you see in the RPNL is pretty much the constant currency growth rates. Of course, this quarter has not yet ended, so it may not be apt to put a number to that at this point of time. Rupee depreciated a little bit in the last few days, but yes, we have to see the average rate for the year, for the 9 months ended, and I think we should wait for another few days to have that.
Understanding is that the reason why your Q2 numbers were slightly subdued is because you're investing in Germany and impact of the base effect. Now, base effect is something which we'll have to understand because of COVID, the base effect went higher. But let's understand Germany. Since you are investing in that market, what is the update from Germany? Will you continue to invest in that market? And will that be in drag because you're investing in that market, because the consolidated picture because of this investment will look slightly down?
So Germany is picking up extremely well, and we are pretty pleased with the way we are performing out there. So we launched in July, but in reality we launched only in September because that's where we got our first proper cable distribution. So right now we are present in 21 million homes in a total market size of about 38 million homes in Germany. So still a lot of good ground to cover out there. But we are like, it's heartening to see the customer growth. So in month of October, we were getting about 100 customers per day in Germany. In November, it was 150 per day in Germany, and it's even better in the month of December. So that's very heartening. The revenue build-up is also happening accordingly. In our kind of a model, we get the customers and then the repeat is fueled, and that's how the revenue build-up happens. So we are extremely pleased with the way it is trending up. At this present run rate itself, next year Germany has the capability to add 4 to 5% of revenue growth for the entire company as a whole. Talking about the margin impact, so yes, Germany is an investment in the first year. We guided the market that there will be a loss of about $3 to $5 million. In this business, the cost comes upfront and the revenue build happens with a time lag. So initially, you see a margin drag in that sense. But we also guided that we'll break even in the third year of operations. And the way it is trending now, there is no reason why we should not break even earlier. So we are pretty confident of the break even in the third year. So for the first 2 years, there might be a margin drag to that extent, but one has to look in that perspective of an investment into a new market, holding a lot of opportunities for us.
Sure. Vineet, the one thing that I wanted to ask you was, given that 31% of your revenues come from the UK geography, and given how scarred it is currently and the numbers keep on rising when it comes to the Omicron variant now, just wanted to understand how you're gearing up for things and what are the feelers you're getting from that market in particular.
So in terms of pandemic, we have now seen the first and the second wave, and this is the Omicron wave which is there. So we are pretty much geared up to face both in terms of safety of our employees or running of the operation smoothly, just in case a partial or a full lockdown or anything like that kind of a thing happens. We have remote hosting capabilities, we have remote call center capabilities all built up. So no worries in terms of operations or safety of our employees per se. In terms of demand, in spite of this Omicron wave, what we see in UK as well as US is a kind of a revenge physical shopping phenomenon. Like people are just sick and tired of sitting at home for more than a year now, and they are just flocking to the retail stores for their shopping in the short term. It's coming back to the digital and the home shopping kind of a phenomena, slightly slower. We are growing in terms of year-on-year growth rates, but the growth rates may not be as high as one used to see in the last year, but again, one has to see in perspective of that it is also lapping the very, very high growth of last year.
Vineet, given that you have a big tailwind because of the rupee decline and most of your revenues are from outside the Indian shores, just wanted to understand what visibility do you have going forward and how your numbers are going to look purely because of rupee acting as such a big tailwind for you.
Thanks. So we like operate in multiple geographies. So while we are gaining in terms of dollar, when you look at the rupee part of that, pound is like with respect to rupee pound, it's not so much of a gain. If you look at year on year, might be slightly down actually. But yes, overall rupee, the way it is trending in the last few days or maybe a month or so, it might give a support in terms of the overall profitability numbers in terms of year on year. But yes, what we guide always is a constant currency growth rates and focus on that, and leave this rupee tailwind is for accounting, because it's more of a translation of the P&L which happens because all our operations are in foreign geographies and the P&L as well as the cash resides there. So it's more of a translating kind of a thing which happens, and hence we guide the market towards a constant currency part only. Coming to, since you also talked about the medium term prospects, leaving the rupee aside, with our growth pillars, so we are expanding in categories. Our non-jewelry portfolio is expanding much faster than the jewelry portfolio. Our platform is expanding much faster. So we are investing in digital space very heavily. We invested in our Geek robotics warehousing. We automated our warehouses. We revamped our websites, and we are like investing in the digital space in the marketing side as well very heavily. And of course, we are expanding by geography. So Germany is the new venture we just went in this year. So all these growth pillars pretty much give us the confidence of the medium-term guidance of 15 to 17%. So very excited. In fact, what we talk about internally is that we have not been more excited before looking at the growth pillars in front of us.
Okay, and good luck with that. Good to have you on the show today, Vineet.
Thank you very much, and season greetings to you and your viewers. Thank you.